What a week in the crypto space. If you felt the floor drop out from under you, you weren't alone. We just saw a massive market dump, a huge flush of leverage across the board. Bitcoin took a 6 to 8% hit, and Ether wasn't far behind, dropping between 7 and 10%. Now, what caused this sudden nosedive? It looks like a perfect storm of large dumps from both institutional and retail investors, fueled by some market jitters and significant outflows from ETFs. This triggered a cascade of liquidations, wiping out a staggering $600 to $650 million in leveraged positions. Ouch. If you were one of those traders using high leverage, this was a painful lesson. It's a stark reminder that in a market this volatile, a simple buy and hold strategy might just be the wiser, and certainly the less stressful, path to take. Let the speculators get wrecked. Long-term holders can often ride out these waves. But amidst the red candles, there's some incredibly bullish news, especially for the XRP community. The moment we've been waiting for is here. 5 spot XRP ETFs are now live and trading on the market. This is a monumental step forward. In just the first few hours of trading, we saw a combined volume hitting around $30 to $40 million. Think about that. This isn't just a flicker of interest. It's a new, steady stream of institutional buying pressure entering the XRP ecosystem. This is precisely the kind of volume the market has been desperately needing. It's a gateway for big money, for pension funds, for endowments to get exposure to XRP in a regulated, secure way. This adds a whole new layer of legitimacy and, more importantly, a sustained demand driver that we simply haven't had before. The launch of these ETFs is a fundamental game changer. And the good news doesn't stop there. We're seeing a massive, structural shift in XRP liquidity, and it's a trend that points to incredible long-term strength. New data shows a significant movement of XRP off major exchanges. And when I say significant, I mean billions. Since February of 2025, a jaw-dropping 6.45 billion XRP has been withdrawn from tracked exchanges. That's a 28.62% drop in the available supply on these platforms. This isn't just a short-term blip or some technical anomaly. This is a structural shift in how people are holding their assets. They are taking self-custody, moving their XRP into cold storage, or putting it to work in the burgeoning world of DeFi and utility-based applications. This is a sign of a strengthening holder base, people who are in it for the long haul, not just for a quick flip. Let's drill down into where this is happening. The trend is particularly dramatic in the United States. Major US platforms like Coinbase, Kraken, and Gemini are now virtually empty of XRP. Their reserves are down over 98%. Let that sink in. The available supply on the biggest US exchanges has all but vanished. So, where's all the liquidity? The data points to South Korea. The exchange up it has become the dominant player, holding a massive 6.18 billion XRP. This geographical shift is fascinating, but the core takeaway is the same. XRP is moving out of the hands of short-term traders and into the hands of long-term believers. This drastically reduces the immediate selling pressure on the market. When the next big price surge comes, there will be far less weak hand supply on exchanges ready to be dumped, potentially leading to a more explosive and sustained upward move. This is the definition of a supply shock in the making. On the regulatory front, the wheels are turning, and the developments are very promising for Ripple and the broader crypto ecosystem. Ripple just announced a major win in Singapore. They received approval for an expanded scope of payment activities under their major payment institution license. This is huge. It means they can now scale up their licensed payment services. In one of the world's most important financial hubs, Singapore is a critical gateway to the Asia-Pacific region, and this expanded license gives Ripple a stronger foothold to grow its on-demand liquidity services and other payment solutions. It's another piece of the puzzle falling into place, showcasing Ripple's commitment to working with regulators and building a compliant global payment network. This is the real-world utility that will underpin the long-term value of XRP. Meanwhile, back in the US, there's a very interesting meeting on the calendar. The SEC has scheduled a meeting for December 4th to discuss updates to corporate governance rules. And what's a key topic on the agenda? The potential use of tokenization in equity markets. This is the future of finance we're talking about. And who is at the table for this discussion? Representatives from giants like BlackRock, Coinbase, and Citadel. The fact that the SEC is actively engaging with the biggest players in both traditional finance and crypto to discuss tokenization is incredibly bullish. It signals that the regulators are not just looking to police the space, but to understand and integrate this revolutionary technology. This paves the way for a future where real-world assets, from stocks to real estate, are tokenized on blockchains. And you can bet that networks like the XRP ledger will be prime candidates to facilitate this multi-trillion-dollar revolution. So, with all this happening, market shakeouts, ETF launches, supply shocks, and positive regulatory movement, what does this mean for the price of XRP? Well, predictions are always tricky, but the long-term outlook is looking brighter than ever. I came across a quote from analyst Chad Steinreber that really caught my eye. He boldly stated that $250 XRP is inevitable. Now, that's a powerful statement. It speaks to the immense potential that many see in XRP, driven by its utility, speed, and low cost. Personally, I've been looking at some of the more ambitious end-of-year predictions. While I think the target of $750 by the end of this year might be a bit of a stretch given the current market climate, I could absolutely see that target being pushed back into 2026. The foundational pieces are being laid right now. The institutional floodgates are opening with ETFs. The available supply is shrinking, and the regulatory pathway is becoming clearer. This isn't a matter of if but when. The current price is just noise in a much larger, unfolding story of value and utility. We are on the cusp of something truly transformative. Thank you so much for tuning in. This is an exciting time to be in the space, and it's more important than ever to stay informed. If you got value from this breakdown, please hit that like button, and be sure to subscribe and turn on notifications so you don't miss our next update. Drop a comment below with your thoughts on the XRP price. Is $250 inevitable? Let's discuss. Thanks again, and I'll see you in the next video.